Hello everyone, today's video is all about short selling. So what is short selling? Well, it's when investors bet that the share price of a particular stock will go down, not up. So what actually happens is that they will borrow the stock from someone, let's say it's a fund manager, but they'll borrow the stock, they will then sell the stock, and then they wait for the share price to go down, which is what they want. Then they will buy shares at that lower price and then give them back to the firm that they've borrowed them from, and hence they make a profit. So that is short selling. It's a risky maneuver for normal investors because the downside is uncapped. Whereas if you go long with a stock, which is what most people do, they buy and hold, the maximum amount you can lose is the amount that you paid for the stock. Whereas with a short trade, it literally can go, your losses can be huge, particularly if your bet is wrong and what actually happens is that the share price goes up instead of goes down. There's no limit to how much the share price could go up to. So short selling has been around for decades, often done by sophisticated investors. Quite famously, they even made a film about it called The Big Short. I don't know if you've seen this. It was all about the financial crash of 2008, where some city guys in the US predicted what was going to happen, and they shorted a lot of stocks in these companies that were selling off these packaged mortgage products, the subprime market. They foresaw what was going to happen. Sure enough, the share prices of these companies did tank massively, and these guys made a fortune. And it was the subject of the film, The Big Short. But what's happened recently in the last few weeks is that we've seen what we call retail investors, so regular investors, not professionals, get involved with the intricacies of how short selling works. So specifically on a firm in America which is called GameStop. Now GameStop has been around for a couple of decades. It's in every shopping mall in the US, and it's basically where you go in and you buy video games. Now the business has not been doing great. The fundamentals aren't great. People are buying video games online. They're not the pandemic, all the malls are shut. So for a while the business has been suffering. Then all of a sudden, in autumn of 2020, a particular individual bought a reasonable amount of shares with a hope of getting a seat on the board, and the share price started to go up. Modestly, not a huge amount, but started to go up. Now, this caught the attention of the short sellers who said, look, this is just a short-term thing. This guy's bought some shares. He wants a seat on the board, but the business is going nowhere. So we're going to take out huge bets that the share price will go way back down. It's going to tank. And so they took short positions, going through the motions as I've just explained. They borrowed the stock, sold it, and then with the intention of buying it back at a lower price. But what happened was, since the start of the pandemic, thousands and thousands of individuals have become traders on the stock market, started dabbling in stocks and shares, who before that didn't really do much on the stock market. And so a lot of these online platforms, especially those with a zero commission, which gets people in and they're all investing a few quid here and there, they all got into these chat rooms and said, look, let's put in some money, basically buy some stock in GameStop, because we think we'll get the share price increased. And they had the view in mind of creating what's known as a short squeeze to basically play against the short sellers. Now, what this means is, if enough people pile into the market and buy shares in the company, the share price will increase. So all these individuals, these thousands of individual DIY investors, not professional investors, started buying shares in GameStop, and the share price went up. Now, of course, the short sellers have been put huge bets that it was going to go down. So the short sellers, in order to cover their position, had to then buy the shares. Remember, the plan for the short sellers all along was to buy them, but when the share price went down, not up. So like I said, the loss is uncapped if the share price keeps going up. So they had to cover their position and buy more shares at the increased price. And this is known as a short squeeze. So the individuals had squeezed the short sellers into this action. They had no choice but to cover their position, which in turn increased the share price even more. So you got this cycle. So the individuals buy the share price goes up. The short sellers are forced, they're squeezed out of their short positions, so they have to close their bets and buy the stock, and the share price just goes up. Now that's what's happened, and it's just been a phenomenon in the US in the last week or so. Now, short squeezes do happen from time to time, but it's very rare that it's caused by individual, what we call retail investors doing it. Normally it happens between the big boys, the hedge funds, the fund managers, guys who've got billions of pounds in their portfolios. They play games with each other and trying to force the other one out and various things. But it's never really been seen before at this level, where it's the individual. It's almost like a David and Goliath scenario. All these individuals clubbed together because of this internet forum that says, let's go after the short sellers. And this has ended up in this company's share price being absolutely inflated way beyond what everyone thought it would be worth. However, this short squeeze, in general, these things don't last because the fundamentals of the business are still not good. And lo and behold, over just the last few days, the share price has started to come back down again. So these retail investors, the individuals, have had their fun. They've made a few quid. Hopefully, they've got out, but they've really hit the short sellers big time. The institutional guys who do this kind of thing for a living have lost billions. So it just goes to show you've got to be careful with short selling. Now, this individual stock, GameStop, is not the only one that these individual retail investors have been playing around with. They've also piled into AMC, of course. AMC being the huge company that owns all the cinema chains, which they've suffered in the pandemic because they've been closed for months. So similar things going on there where the share price has gone down, but they're trying to pile in to get it back up and then hopefully sell for a profit before it eventually goes down. And also American Airlines, that has seen similar activity recently. So all sorts of funny things going on the stock market based on the not just the pandemic, but fundamentals and companies where everyone thought it was game over, but then individual investors have clubbed together through the power of the internet and these chat rooms and said, look, let's pile in and let's get one over on the professional institutions who are short sellers. So that's just an overview there of short selling. What is it? How it's been hitting the headlines recently. So if you like this video, please do subscribe here, and I will see you soon.